What's going on, everybody? It's Jeff here. Welcome back to the channel. The Fed minutes have been released. Jerome Powell is currently giving his press conference right now. I watched about 20 minutes of it to get a good idea on two key factors that are going to give us a good indication on where the market is headed. The first one is interest rates are staying low, and the Fed is going to continue buying at least $120 billion of securities going forward. Okay, so let's get into this video. I want to talk about what that means for obviously the market over the next few weeks and months, and then also I want to talk about AMC's institutional ownership, guys. So let's get right into it. First off, take a look at SPY. This is the S&P 500, guys. At 2 o'clock, had a little bit of a dip as soon as the confirmation, okay, that the Fed was not going to start any tapering, or at least any announcements of exactly when the tapering is going to begin. It absolutely ripped back up, cooling off a little bit right now. I do want to point this out. I'm going to jump over quickly to the one-day chart. I gave an announcement to the group, all right, after the S&P's last Monday's hard sell-off, okay, it came roaring back 5 monster green days. We knew that the Fed was meeting today, and every single time the Fed meets and Jerome Powell speaks, there's always a little bit of nervousness because this easy money policy eventually has to end, and all investors know that. So I gave out this SPY put right here, it was for the August 9th $440 put on SPY. It was actually up about 90% at one point as of yesterday. We ended up closing it at today at about 40 to 45%, and a lot of people in the group absolutely crushed it. I also picked up this one. This is an NVIDIA August 6th $200 call for 260. This I literally placed at probably about 202, right on the dip. The limit order had filled. This one was a quick play. It's up about 15%, and I'm looking to close that very shortly because the expiration is very close. If you're new to playing options, having very close expirations, the theta or time decay will absolutely kill you. So I'm looking to close this one very quickly for a nice profit. But let's get into the Fed minutes really quickly, guys. It talks a little bit about the system open market account holdings and exactly what the reverse repo is going to be and where they're the Federal Reserve interest rates are still staying the same amount. Those are the two things that mean the most to me, is that the interest rates are not rising, okay, and that they're still going to continue their asset purchasing. Now, what does that mean? Okay, for those of you guys that are like, okay, Jeff, what does that really mean? Well, first off, when the interest rates stay low, that means it is very easy and cheap for individuals like myself to borrow money to go buy a house or to buy a car or to a personal loan or anything. So therefore it causes spending in the market. And it's also very cheap for investors to borrow on margin to continue to invest even more into the market to make their money on. That's what that means. Okay. So as far as a market standpoint, it's bullish for the market when the interest rates are staying low. As far as a consumer personal standpoint, well, expect inflation to continue to rise as it has. Inflation is getting a little bit out of control. However, Jerome Powell still stands firm that 2% average is going to be maintained. When it comes to asset purchasing, the Fed purchases assets in order to offset the bond market, in order to keep it afloat. Once that starts to cool down, okay, the bond yields are going to need to rise in order to attract investors away from the stock market. That's why it's very important for everybody to always watch exactly where the bonds are, because once it gets to that point where bond rates are higher, because bonds are they're almost riskless, right? They're very safe to invest in. So once it gets a little bit higher, investors will be like, you know what, the market is already inflated. Okay, there's a lot of risk in the market. Let me park my money over into bonds. And that's when you start to see the market pull back. So it's very important to pay attention to those two different key factors that like I said, are going to be talked about every single time the Fed meets. Okay, but let's get into AMC. I'm going to take a quick peek at the chart. This is the 1 day, 1 minute chart, guys. I'll zoom in a little bit for you. It is following that 50-day moving average very closely. If you look at it on the 1 day chart, it has recovered almost 10% from where it was at an open low of around about 10 o'clock this morning. We are still green for the week. A couple things that also I'm excited to talk about, guys, even though I'm an insane options guy, okay, the options volume is down on AMC. And while there are still a lot of, big guys, playing these options back and forth with each other, okay, because AMC is a very volatile stock, I see a lot of retail investors slowing down their purchase of AMC options And while, like I said, I am very bullish on options, if you're unfamiliar, okay, and uneducated about options, which I feel like a lot of people, okay, who originally invested in AMC were new to the market. They might not, I'm not going to say they're insanely uneducated, just they were new to the market, okay, it might be best to be able to stay away from a volatile stock in options such as AMC. And seeing that volume down just means that more retail investors are buying and holding the stock rather than losing money on options. And we also know the speculation that the hedge funds will manipulate that price as they see certain volume flow into strike prices going in for the close of that week. So that part is good. Last update for you guys is the institutional ownership. If you look at where we stand currently, which we still have about 2.5 weeks before the final 13Fs filings come in for Q2, it still shows, guys, that the selling pressure from institutions is not there. When you jump over to Fintel as well, all of the 13Fs that we have as of now, this is still all bullish volume. There's a lot of prices in here. 39, 33, 36, more 33, 30, more 33, 33 again. There's still a lot of bullish volume and there's not a lot of selling pressure to continue to happen. So all good news going ahead for us, guys. I'm still looking for that bump above that $40 mark. Once we can get again above that $42, $43 level, gets into that little bit of blue ocean up until the next resistances we had in that $51, $60 level. So guys, that's going to be it for this video. If you're interested in learning more about options or following along the plays that my whole community loves to play on, guys, check it out. First link in the description. We'd love to have you. I'll see you in the next one.